Do, 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 do. All right. EA. It's in the game. All right. Remember that? Electronic Arts, EA, NASDAQ. I got an alert today for EA. All right. Let's jot along to the monthly candle chart. Let's center all this price action. Look at that. Put that smack in the middle. Look at that black space all around. Where's this gonna go? Well, let me zoom. These are monthly candles. So 6 to 12 candles 1 year, 6 months to 1 year. And Stan Weinstein framework, which is a target and still the main focus of my Secret Wars saga, is on the 5-year weekly. So that's a big chunk of time on that slot. Here we seem to have a nice base. Here we had, here's the top forming out. And what happened? We had a breakout right here of this nice little pattern right there. So let's put some alerts here in case we go back down. So on the, if I'd be applying my classic trading, chart trading framework, I define my resistance and support lines from top, from open and closes together. Here, added to a breakout line. And if I have a monthly candle close, May monthly candle close above the 127, and my measured move is all the way to 136. So already we're on the right side of a breakout on the monthly candle chart. Just have to wait for a close above that, right? Because remember, that candle could end up like these candles here. The wick could just be noise on the weekly, defined on the weekly and monthly charts, and we could end up just with a wick right here and a close below 127. Close below 127, then who knows what's going to happen, right? Could be price action, could be just go back down here, test the support at 117, 118, could break down all the way and test this more important support right here at the 105. So a whole bunch of things could happen. But right now we're here, and to make sure you don't get trapped, the best move is to wait for the monthly candle close right there. All right, let's jot on down to the weekly with my Stan Weinstein framework setup with my RSI, because I don't have the Mansfield indicator. I'm using the classic RSI. I have the super duper important volume, and I have the Ichimoku cloud. When the price action is on top of a green cloud uptrend, when you're below a red cloud downtrend, and the more you move sideways, the more the cloud thins out, and that indicates stage 1 or stage 3. So right now what happened, you had a nice stage 2 going up. It broke out of here. Now it started forming a stage 3. And remember, there's support here, right? So until you had a candle close below that Ichimoku cloud, you didn't have that ultimate confirmation for to play that stage 4. So still stage 3. Oh, moving average starting to creep up, giving signs of a stage 4. And right here, even look at this candle. Was that the original breakout? Arrow, what are you telling me? Yeah, look at, oh, okay. So even right here, you had a continuation, and the RSI, yeah, was already going upwards. I'd rather when it's going through the halfway point or out of the halfway point going up. Now it was already above 3/4 in the 60 area, or 2/3, about 2/3 going up. And you had the long wick. And that sometimes could be a warning sign for non-Mara Buzu candles. What you would have liked is no wick, like price action starts at the bottom, close at the top of the day. And that is, let me check that out. That candle is the last week of January, early February. What you could do is you could go on the daily and to see that wick. Is it positive or negative? If that wick, gap up. Okay, what are these days? 31st, where does it start? Okay, 29, last week of January. So the price action started here, gapped up, and went down. And what's not super duper good is that the price action went down to refill the gap, but on high volume. Right here, that red candle, that top one right here, you should have, after the gap up, you didn't want, you would have preferred a green candle with good volume there. Either case, price action went back down and it's still closed above the breakout line. But it's always good to see on the intra to understand that wick. See, here was a gap up that filled, but it could have been just a natural pullback. You could have actually seen the price action go up and price action go back down, and then you would have wanted to see contracting red candles on the way down. Then we said, okay, I'm going to take that breakout candle on my weekly candle chart on my Stanwine sign setup as a good breakout candle, because that wick, I explained it, because it's the intra action of that candle was actually a pullback on low contracting volume, which is okay. So this is the symptoms of what happened here. Price action, decide to market, give it more time to digest, wasn't ready actually to break out. So you could have been in. What would have happened? Let's see, you would have decided to enter. You would have entered here, would have put your sell stop below the breakdown line, below the bottom of the pattern. If you're an investor and traders, you would have put it below the 30-week moving average, below a round number. So 115, maybe 114. Could have put it 114 right here, or 114.95 maybe. Yeah, I would have probably put it 114 just to make sure. There's no use hogging it too much just to get those extra points. That's another emotion management technique to control that greed factor. Right away you know that you're being greedy when you're trying to squeeze. Okay, which candle could I use? Which one's closer? Which one's gonna give me? And for these micro points, these micro, just to get that extra leverage, that to skew the risk reward more in your favor, but it's not worth it, guys. The investor's way, Stan put it very far away because he knew that stock could gyrate. Make sure you don't get triggered out uselessly in case there's some crazy volatility and a huge candle went all the way down because of some crazy whatever. Traders, it's tight, gives you more opportunity to be tight, but don't put it too tight. So this is a good move. Think about that always. And if you try to squeeze it up too much, talk to your conscience or talk to yourself and say, I'm being greedy. Do it the investor's way. There's never no greed because it's a horizontal breakout. The horizontal pattern where it broke out of, you put it below that line and you're safe. And that's it. Small position size, but very low chance of getting triggered out. In case you get in too early and the market goes like this, gyrates, and actually that's like a stage 3 continuing or stage 2 that doesn't really want to take off. And here we see 114.88. So you would have, if you would have put at 114.95 too high, you would have got triggered out. So you keep it a little lower, and hopefully you respect that. And where are we today? That's what I want to get to. Oh, okay. Here, I got my alert today. Even on the weekly now, it's breaking out. Another breakout. All right. So on the monthly, 127 is my monthly defined breakout level. On the weekly, it's 128.94. So 127 on the monthly, you want to close above that on the monthly. On the weekly, you want to close above 129. And right now, price action 131. If you're close above 129 on the weekly and you have the RSI going upwards above halfway point, love it. And you get this candle here. Tomorrow's Thursday, Friday. Well, this is going to be published on Thursday. So hopefully you get this 10 million average. You get a 20 million, twice the average of the previous 4 to 5 weeks. So you want the volume to go all the way up here. If you get that, you know that you have a stage 2 continuation breakout right there, Stan Weinstein. And that's very good news for EA. And if you want that extra confirmation, you don't want to get trapped. If you have any doubt that you don't trust that breakout, you don't get the volume, then wait. Just wait. Just wait for the monthly chart, that monthly candle to end. It's only a few weeks, guys. Go play tennis. It's nice outside. Do something, but just wait it out, guys. I wish I didn't even talk to you about EA until the 2-3 days before the end of the month, so you don't get any ideas and pull the trigger too early. But all these crazy alerts, they're free. Click, click, click. Alerts. And keep the chart open. End of May, come back to EA. Make sure you're close above those levels. Get the volume. And then time to buy some EA Sports. All right. It's in the game. Ciao, guys.